Yeah, it's been. I mean, what I'm seeing is in the group, some people are making a few over trading mistakes. So I'd like to start to address that. Like, like really right now, everyone should be fully invested, and everyone should be invested in the strongest coins. And that's it. You shouldn't be swapping around too much, like little bits around the edges, and you shouldn't be trying to go all in and all out. You should just like chill. Like this is a time where you're going to make the most money just by hands on the steering wheel. Like let's
Just by
fucking go.
being here.
Just by being here, you get it's a participation trophy. It's the woke championship. Every child wins a prize. All you get for not touching your fucking trading account is $1 million. And and I think it's within every single person's capability, no matter what size they're starting with, to finish this cycle with $1 million. I really do at this stage.
Okay.
Oh,
Nice. Okay, I'm on the
welcome,
chart.
guys. Welcome, welcome, welcome. Let me know when this starts to stabilize and you tell me to kick it off.
Okay, we are good to go.
All right, guys. Welcome, everyone. I'm in Japan on holidays in the snow with my family, so I'm wearing a normal shirt today. Let's kick it off. What a week. I mean, what a historic, incredible week. It's not always like this, but the next 3 months it probably will be. Upside down, this market is even more retarded than last week. And I want you all to tell the truth. When I called alt season, well, it's 4 days ago now. Who believed me? Like we called it on February 26th, and that was right. And last week we were back here. Who thought we'd be here discussing all-time highs? And we're so close in Bitcoin that we're definitely getting to all-time highs, right? If you think the market is nuts now, can you just imagine how nuts it's going to be once we reach the highest fucking price ever recorded for Bitcoin? Now, let's just think about what happened in the last week. In the last week, we went up further than we did in the first 6 months. And the first 6 months was pretty fucking good, right?
Mm-hmm.
This bull market is stronger and faster than 2021. It's stronger and faster than 2018. We're on. We're fucking on. And there's a reason why. The reason why, by the way, isn't the halving. That's bullshit. The reason why is that these ETF flows are reflexive. They're a positive feedback loop. So here are our list of ETFs. This is GBTC, the scam one, the old one. And you can see it's a red is a negative number. Money is flowing out of this and into all of these, and fresh money is flowing into this. This is the total. You can see that when the market goes down, money goes out of Bitcoin. When Bitcoin goes up, these flows are becoming a positive feedback loop. So yesterday we had, $1 billion worth of flows. The day before, 951 million worth of flows, 455, 867 million. And what happens is that the ETFs are forced to buy Bitcoin, and this makes Bitcoin go up, which means they have to buy more Bitcoin because these ETFs have to stay balanced. If they've got $1 billion in their ETF, they have to buy $1 billion worth of Bitcoin. And this makes the price go up even more. But there's a catch. And the catch is that because it makes it go up faster, when it goes down, it's going to make it go down faster. And this overall is a good thing, since our trend system returns are strongly, strongly correlated with volatility. You can see since volatility kicked back into the market, you remember I told you back here that this was the ideal time to get into FinRev, and I fucking wasn't bullshitting about that. Like every single day for the last 7 days, we've made money. And that's despite the little flash crashes, despite all the bullshit. It's going to lead to mini flash crashes along the way. That's just the way it is. This is just the price of admission. Now, this is all of our coins that we follow. You can see we have the little flash crash, and it's a buying opportunity for all of them. Why? Because weak traders get shaken out of their positions and and the guys that are left are guys with diamond hands. The guys with diamond hands, if they weren't shaken out by this, it takes a bigger dip than that to shake them out. So they get more and more confident and they buy more. Fortunately, I was able to notice that this was about to happen, and give you guys a little warning, tell you to hold off on buying. Don't freak out when it happens. Expect it in the next 8 hours or so. We got that. We jagged that one. It's still a bit scary though. So I'm going to show you how to sidestep that next time if you're on the ball. It's not necessary, but it's like, I may as well teach you the advanced stuff. So what I have here is I'm using Coinalyze. You could also use velodata.app or a Terminal Lite, or another one I really like is called spreadfighter.com. But Coinalyze is cheap and free, and it's free actually, and you can just access it from the web browser. You want to load up open interest. Open interest is the amount of derivatives trades going on. Now, the first thing that you want to look for is a relatively elevated level of open interest. What that tells us is that there's a lot of betting on in the system. When price is going up, but open interest doesn't go up, this is a red flag. To anyone who's an experienced trader, this is a flashing red, holy fuck, we're going to have an air pocket soon. And you can see that we reached an air pocket here. So why does this work? When open interest goes down while price goes up, it tells us that traders who have been positioned for a while are getting out of their trades and passing off their bags to new guys. A guy who buys here is in a very different position than a guy who bought like 6 months ago. Weak hands are weak hands aren't pussies. Weak hands are guys who just got in recently. Guys who got in recently are by definition nervous. They're really easily spooked. And when you see this, you can expect the next down move to be particularly fierce, and you start taking profits and being cautious. Now, here's a way that I'd like you to look at it. Price is going up, volume is going up, open interest is going up, happy days. Price is going up, but volume down and open interest down. This tells us that there's something's rotten in Denmark. It's not quite a signal. It's not a signal to go short. It tells us that the uptrend is on its last legs, right? This is the thing that we're looking for. Now, when price is going down and volume is going up and open interest is going up, it tells us that as price is going down, people are continuing to bet on further price declines. You don't want to buy that dip. That tells us that the downtrend is probably going to continue. But when price is going down, and it's going down on decreasing volume, and open interest is going down, it tells us that the down move is almost over, and it's time to buy the dip. Okay, I think I'm going to take questions on that because that's pretty important. Freedom, yeah, I personally leave volume off too because they're quite closely correlated. So I would just do price and open interest. That's a really good question. Please tell us where ETH is going. ETH is going up, way up, nasty nice. So the main thing that you want to look at here, price going up with open interest going down. All right. What should you do in these situations? So it's very different if you're holding spot or leverage trading. If you're holding spot, really, honestly, I just switch the screen off and just like forget about it for a couple of days. It's totally fine. The big money, if you're holding spot, like what I mean is normal coins, a Coinbase, a Binance, a Kraken or whatever, is that I can absolutely guarantee that everything that you're holding is going to be higher in 6 months than it is now. You don't have to sweat every little wiggle. There's a question in the chat freaking out about Ethereum had a down day. Fuck one day. You know, the trend is up. Any down day is an excuse for traders who missed out on the rally to buy more. And why do we know that? Because these coins have all gone up so fast. There's plenty of people who aren't positioned. Almost by definition, any pullback they look at it and go, wow, it's on sale. It's like a Black Friday sale, Cyber Monday sale. And this kind of armor plates the rally. So you really don't have to worry about the bull market ending right at the moment. You don't have to worry about that. So if you're leveraged, what should you do? Let's say you're 5-to-1 leveraged. If you're 5-to-1 leveraged and you get a 20% pullback, you can get taken out of the game. And remember, taken out of the game means you don't get to play anymore. It means you're broke. So you have to back off. You have to. Where do you have to back off to? You have to back off to the point where you can't get taken out of the game. And usually that's about 3x max. Probably 2x is safer. You're not going to see a 50% crash unless you're in really, really bad shitcoins. But yeah. So when you see impending crashes likely, just hold off on your buying. Just say, okay, I'll buy it tomorrow. Like worst case scenario, I have to pay a bit more. No big deal. And what you want to ideally do is place a stink bid. And a stink bid is a bid that's far below current price, because what you'll see in these flash crashes is that they flash all the way down in sort of 1 minute. 1 minute they'll drop 5%. And if you can have a bid waiting there, you'll never get to the screen in time to do it. You'll never be good enough. But if you can have a stink bid down there, you can get filled and be immediately in profit and have a beautiful, never ever touched again entry. It's a very, very classy way to trade, and because it's taking advantage of a price inefficiency as opposed to a risk premium, it's a much higher probability of trade. Now, the key understanding here is that any flash crash, what is a flash crash? A flash crash is when leverage traders get liquidated. They're liquidating, sells their coins at market. That market selling drives the price down, which liquidates more sellers, which drives the price down further, which freaks people out, and they start selling, and everyone mashes the button at once, and it causes a panic. That panic pushes price far below fair value. And anytime something is cheaper than it should be, the smart play is to buy it. When there's blood in the streets, you should buy. And what should you buy? Well, that's pretty fucking easy. So let me show you this. Let me post this in the chat. So you have this link. Here's this chart that you're looking at that I just posted. So this is a spaghetti chart. It's got all the coins we follow on it, right? You can see our little flash crash, everything shit the bed together. So don't believe any stuff about, oh, there's a safe haven. That's all crap. So let's move the flash crash to the left. Right here. Now, what you want to buy when you see a flash crash is the things that bounce hardest. And what bounced hardest first is, look at the thing that have bounced the most. Phil, Sol, INJ, Phil, Sol, and INJ. These are three things that we hold. Lever, Woo, Sui. These are all things that we hold. And you can see that they just race out to an early lead. Like Lever here racing out to an early lead. Phil racing out to an early lead. Sol racing out to an early lead. This is very, very simple. So, and I mean, this is like, an hour after the crash, what's winning? Oh, Lever, INJ. Great. Just buy both of those. Very, very easy strategy. Scott, is it possible to set up trailing stink bids? Maybe. I've never done it. What made everything go down? It's a reflexive positive feedback loop. So what happens is when everyone gets long, all the people who are planning on buying a coin have suddenly bought. So when everyone owns the coin, there's no one else to keep buying it and bid the price up. It creates kind of like an air pocket. And when the open interest is very high, and when you've got weak hands in the system from new traders, it creates a dynamic where a pebble can kick off an avalanche. So it's not robo trading algos or any of that stuff. It's just a natural consequence of when everyone gets super bullish, crashes happen. Crashes don't happen when everyone's scared. Crashes happen, little mini crashes like this happen when everyone's super bullish. Okay, let's move on. So the flash crash has caused sector rotation back into what were the previous hot coins, Sol and INJ, that had fallen off the boil a little. So this is important information. And you'll notice that our 100x Coin Club coins are generally leading the pack. So 1, 2, 3, 4, 5, 6. We're holding all 6 out of 6 of the top coins off that bounce. Why? Because we're taking advantage. It's not because I'm some sort of like all-seeing, all-knowing fucking prophet. That's bullshit. We're holding the strong coins, and just like the battle isn't always for the strong, and the race isn't always for the swift, but that is damn sure the way to bet. Oh, quickly, let's look at our accounts. I haven't got my Binance and KuCoin account up, but let's quickly look at the leveraged account. Last 24 hours has been was okay, but kind of shitty. It's not that bad. 16 grand in the last 24 hours. Last 7 days, been a mixed bag. We went down and up and down and up. Where are we now? Up 5,800 for the week. Not great compared to FINRAD, to be honest. But all time, I've run this account from 10,200 up to 9,600 since November 16. That's okay, I guess. I'm going to take this one to 1 million, and then FINREV's going to take it to 10 million. My Binance accounts, I think, are at like, can't remember. There's about another bit under 300 in the other spot accounts that I have, and FINREV we'll get to in a little bit. So my philosophy of altcoin trading is that you guys need to do whatever it is that is going to make you a profit right now. So you need to get out of your head the idea that it's this undiscovered gem, and that sooner or later people are going to realize that my coin's the real future of money. Like, that's all retarded. Fuck all that shit off. We have 4 pillars of shitcoinery. We have momentum effects, that money tends to flow into the strongest coins. This is a demonstrably true effect that we can take advantage of every single day, and we do. The second thing that we can do is knife catching, which I'm going to cover in detail today. I think you're going to love this. The next thing that we can do is pump and dumps. There's one right now in CVX, and but there's not really any pump and dumps going on right now, because there's no need for anyone to pump and dump, because the market's doing the work. There's no need for manipulation. Oh, there is a pump and dump in a coin called AR, an AI coin that I think I kind of missed it, to be honest, but it's still going. Now, the last thing is narrative plays. Right now, the big narratives are AI, and I thought that meme coins would not strike back. I was wrong about that. Meme coins are having another moment. Doge is really, really performing strong, and that will probably, the shit will probably flow downhill into other meme coins. And we've just got into really the dumbest meme coin I could find, which is called Retardio. It's so stupid, it's going to work. Now, breakout effects are very easy wins here. Now, breakout effects work better on bigger coins. So anything within spitting distance of new highs, and I'll show you what I mean here. So let's look at the dip buying play that we did last week here. We went long here, soft stop here is the way I prefer to play it. And you can see that once it got close enough to these old highs, it just kind of vacuums up. Like, once it gets to here, what happens is that anyone who was planning on selling their coin to bank profit will say, hang on, it's probably going to get at least to a double top. So why wouldn't I just hold off? And that creates this kind of, and it just sucks it up, which is exactly what happened. And this Sol is off to the races now. We can see this also in another dip buying play that we took in Pendle. If you haven't seen our dip buying stuff, Ian might post the setup in the chat, but we have element 1, the lowest low in 10 bars, which we have here. Element 2, one or more higher closes, element 2, without breaking this red line here. We have one or more higher closes. Element 3 is one or more lower closes, black close, without breaking this red line. We get long as soon as it crosses a daily bar high, and you can see that we're long pendle, up and away. This one is within spitting distance of the old highs after it's gone sideways pretty much since February 4th. So it's gone sideways for a whole month. It's a strong coin. It's an ETH beta coin. As soon as this hits old highs, price discovery is going to hit it and it's going to bang, and we're going to have another off to the races scenario. So this is a very, very strong play for this week. Now, when we're talking about dip buys, our price action setup gets us in a little earlier than waiting for it just to vacuum up to the top. So we caught some with Sol and Pendle, and there's a bunch of others, and including Tia. And I think I want to show you, some people like to use hard stop losses. I am not an advocate of hard stop losses. The way that I prefer to do these trades is exit if it closes below the red line, rather than leaving a hard stop resting in the market. And the reason for that is obvious. You can see it's quite a lot of the time it just hits down below and then backs up. So if you used a hard stop loss, you would be out of this trade. If you used a closing basis stop loss, as in you set an alarm and you do that by right-clicking on here and going add an alert and go once per minute, and then you can send it to your email, or you can send an SMS, blah, blah, blah. And then exit the next day at the close of the bar. So this is an important point for you guys. If you're looking at daily charts, don't make any of your decisions intraday. All it's going to do is fuck with your head. All you want to do is check them once per day. Really, honestly, once per day is enough. I check my charts in the morning, and then I have a bit of a sneaky peek in the afternoon, but I make all my trading decisions really at the one time in the day. Now, pro tip here, don't be afraid to add to winning coins. Like this was Ondo. We bought the dip. We thought it would vacuum. It did vacuum, and then we added to it. You can completely add to a coin that has momentum on its side. You have no need to go out and find a new winner. There's thousands of these coins. Like, you're just going to get confused if you hold more than about 10 of them, right? It's easier to manage 5 to 10 positions in your portfolio. Now, moving on, knife catching is something I haven't covered much, but it's going to be very easy wins going forward. And what I want you to understand is that the price of what a coin is worth isn't really a mystery. Buyers and sellers are mostly pretty evenly balanced in any order book. And, we can see this if we pick an order book. This is INJ. You can see our order book. The buyers and sellers are mostly pretty balanced. If it gets too cheap, these buyers are going to step in and buy. If it gets too expensive, these buyers are going to step in and sell. Forced sellers, guys who don't have a choice, as in stop losses get hit, or there's some forced selling around the end of the month and forced flows around ETF buying. These flows, these forced flows, can push the price far below the true value. And when a price is below the true value, most of the time, we're taking what's called a risk premium. Momentum is a risk premium. We're taking on a particular type of risk, and on average, we're getting a return on that risk. When you get a price inefficiency with forced sellers are making the price wrong, this is a much more attractive opportunity. It's a very short-lived opportunity. You have to be quick, but it's much, much, much higher probability. It's not really the 60, 70% probabilities. These are more like 80, 90% probability trades. So much of my profit has come from taking advantage of their dumbasses and their stupid stop losses and their forced and constrained selling. This is one of many, many reasons I recommend not using stop losses, except in rare circumstances, or except if you can't be in front of the screen. If you can't check your market, if you can't check the market for a week, like you're on holidays, you probably have to use stop losses. But generally, and also if you're shorting something that's a really bad shitcoin, your losses are potentially infinite with a short. So you probably do have to use stop losses there. But generally, stop losses represent a cognitive mistake or a position sizing mistake. Usually, if you need to rely on a stop loss to avoid going broke, you're probably trading too big. And you won't find stop losses anywhere in the professional trading world. If you go work at Optiva, Jane Street, XTX, Citadel, and you tell them I've designed this trading system with stop losses, they'll just immediately laugh you out the door. It's so amateur hour. And yeah, I'm aware that every time I say this, I get retail traders who will literally die on this hill, but you need to have stop losses because this guru who never ever made any money actually tells me that you need to use stop losses. It's just not true, guys. It's not true. Now, how do you know it's not true? Well, FINREF doesn't use stop losses. It's got smaller losses than any of you, and me included. All right, so let's look at a few examples of knife catching. Someone want to put one of the major coins in pick a coin in the chat, one of the major coins, and we'll take a look at some knife catching plays. AVAX, there we go again. Good man. Okay. There's a couple of different free softwares you can use. This one I like, velodata.app. It's free. It's really good. Okay. Let's get rid of that. And get rid of that. And let's get rid of that to make it easy to see. So the two things that we want to see. This is a 5-minute chart. Let's look at a 1-minute chart. We'll see it really clearly on the 1-minute chart. Here we go. So when you see giant big liquidations, actually, we'll see a bit more data on the 5-minute. It'll be a bit easier. So generally, any move, this went from 39 down to 35 in a 5-minute candle. You can see this is quite obviously people getting wrecked. Anytime you see this, and this, you can add an indicator, liquidations. You can see aggregated liquidations here. They all have some version of this. Now, what you want to see with this is the open interest going down a little bit in advance of it. That tells us that traders are getting out of their positions, meaning they're getting forced close, forced close, forced close. When you see this giant big fuck off thing, if you've got your stink bids here, you're very happy. Like you might layer them in 1, 2, 3, 4, 5, like small ones, and layer them down so that if you're lucky, you get as many as possible. But when you see the liquidation as being this big fuck off boner candle thing, like just one big dick sticking off by itself, and it should be, you can see that that is bigger than anything that we've had for ages. And if I load this out to an hour, that liquidation is as big as everything back to the last liquidation, which was also a nice dip buying spot. Now, what you want to see to be sure is, see when open interest starts to rise a bit here? This is when other traders have realized that, oh shit, that was just a false alarm. And now we're all aping back in. The reason these trades are attractive is because this part, if you get in here, 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 which is why your stink bids are important, this part to here is almost free money. This part back to here is like a 90% probability. This part up here is really 60% probability. But together, these are phenomenal, phenomenal trades. Okay, any questions on that? AVAX, totally fine. Let's look at one more. Someone said Pepe. Let's have a look. So we didn't really get much, did we get liquidations on Pepe? Yeah, we got some liquidation, but there's so much strength on here that it bounced back straight away. You can tell that there wasn't much juice here. Really, and we can tell that really you want something that's pushed far from fair value. Let's look at Bonk. Okay, Bonk is a little better. So we have the liquidation. You can see here's when traders realize, oh, false alarm, and we've got to ape long. Again, it's not, this coin is so strong that it's not necessarily the best dip buy to buy. What you really want is something that's pushed very far from fair value. I don't know if there's a future on dog with hat. Let's have a look. Oh, let's have a look. This is one I never saw dog with hat coming back like this. Okay. So let's have a look. So you can see just before the top, see how price goes up while open interest goes down. This tells us very clearly that big holders, big enough to move the market, are dumping their positions here. This is the clue that this thing is about to shit the bed. When you see the liquidations, the period of shitting the bed is over. Safe to get back in the water. And look at this thing. Damn, I missed that one. All right, let's move on. I'd like you to zoom out and look at the bigger picture. You know, this is Bitcoin. This is the altcoin market cap. We really are in a position that we're going to play catch up. Big time. Why? Because all the motherfuckers buying Bitcoin know that if I'm buying Bitcoin at $64,000, $62,000, my upside in the next couple of months is probably to 100,000. I might make 40% if everything goes perfectly. Shit, dog with hat made 40% yesterday. That opportunity is so much greater that people just can't help themselves. We are a greedy species. So here's what I see as the most likely path going forward, which could change. So I see alt season taking over from Bitcoin strength at some point. Most likely kicked off with Ethereum and Ethereum beta strength too. I'd see the bigger alts, Ethereum, Solana, kicking it off. Then I see an everything moon stage, which is almost there, but not quite yet. At the last stage, like a couple of weeks to a month before we're going to get wrecked, temporarily at least, we're going to see what I call garbage floating to the surface. So we're going to see really, really dumb shit start to move. Then after that, we should crash and pull back for at least a month. Now, there's a special situation this week. I've slept on Doge. You can see that Doge has really started to outperform its peers from the 26th, and it's really outperforming them now. I should have noticed it like 2 days ago, and I didn't. That's on me. I think the next pullback, I'm going to have to buy some fucking Doge, as much as that pains me to say. So the plan has always been, you're going to get the bag with the 100x coin club. Nothing can beat a discretionary trader or a leverage trader just like zigging and zagging and zigging and zagging when the market's like this. I can't do what I'm doing now most of the time. It's just that the sun's shining and we're making hay. You're going to secure the bag by shoving it in FinRev like we all do. You're going to 10x those winnings over the next couple of years, not over the next year, but over the next couple of years with our automated systems, which continue to double your money even at the end of the bull market. And then it's generational wealth time. You can fuck off and do whatever you want. So this is our FinRev equity curve. You can see the last 7 days, it's been pretty wild for my the last 7 days, I haven't exactly covered myself in glory. You know, I'm up, but it's been a bit crazy. But FINREV has been profitable 7 days in a row, and bullshit profitable, like amazingly profitable. So the best indicator that we have is our FINREV equity curve. Why? Because FINREV only works when we have momentum. When FINREV is making money, we have strong market momentum. It's as simple as that. The 4 things that we do: pump and dumps, knife catching, narrative plays, and momentum effects. These aren't going to last forever. We probably got a year, maybe a bit less, maybe a bit more. Like, honestly, I think we've got a year, maybe a bit more. It looks stronger than I ever thought. So who knows, really? But these bull markets always end eventually. And when they blow up, they end in nuclear fashion. And the game is not how much you make, it's how much you keep. And I'm going to show you in a few minutes how we're going to take the profits from the 100x coin club, get about 10xing that on autopilot without ever risking the money that you've already made. And when I say 10x returns on autopilot, you might think that's bullshit. But since 2019, what I'm going to show you today has turned a $10,000 starting investment into $203,000 at a compound annual growth rate of 107%. Today, you're going to see a press button make money system that makes money every single year since we started in 2019. Never had a losing year. Now has 6.3 million of our own money, making 100% per year. Earns risk-adjusted returns better than Soros and Dalio put together. No shit. Our customers made over $1.7 million profit in the last month alone. You can see this is broken down by exchange. It works in bull markets and it works in bear markets. It printed money during the SBF, Sam Bankman-Fried ripping everyone off stage. It worked in every other really bad thing that happened to crypto. There hasn't been any exceptions, actually. Why? Because when the market crashes, we're betting that it crashes. When the market goes up, we're betting that it goes up. We don't have an opinion. It requires no thinking, no luck, and no predictions. Requires zero knowledge of crypto and blockchain. Those who know me know I barely even know what these coins fucking do. I don't have any opinion about what's a good project or what's a bad project. I think they're all scams. It runs on autopilot. You don't need to check it at all. It takes 3 minutes to set up. If you can set up Netflix, you can do this. It requires zero technical skill. It takes the risk out of crypto because it makes money like clockwork in bear markets. 4 of the 10 biggest hedge funds in the world use it, and it's created countless billionaires and multimillionaires like this guy, John Henry, Liverpool Football Club, Boston Red Sox owner, owns this racing team. He's worth $4 billion, all from trend following. This dude, Clifford Asness, wrote the second academic paper on trend following. He's worth $1.6 billion and manages $150 billion. He came out today and tweeted that he has now got 20% of his fund in what he calls alternative trend, which is including crypto. I've been doing this since 2014. I've got my retirement accounts in a TradFi trend fund, and these are my personal results. January was pretty good at 2.2%. I did 51% last year, 89% the year before that, 32% the year before that, 18% year before that. And I've got $4.5 million in this in my retirement accounts and counting, which is very nice for me. It's all based on the oldest and most consistent way of profiting from any market, which is trend following. And we all know that the trend is your friend until it bends. So what is trend following? It's the simple idea that a coin that starts to go up has a higher probability of continuing to go up in the future. This is as close to a law of gravity as we have in financial markets, and a body in motion tends to stay in motion. I think you've seen enough of this so far to know that it's just a fact. It's an edge that was previously only available to the very largest hedge funds in the world. And there's an entire $300 billion industry. They've been printing money hand over fist for 40 years. In that 40 years, not one fund has ever blown up doing this. Firms like Dunn Capital have outperformed the S&P 500 by 475% over the last 50 years. My retirement accounts are with this fund, Mulvaney Capital, which has outperformed the S&P 500 by 600% over the last 20 years. This is the S&P, and this is the strongest period for the S&P in the last 100 years. And my retirement accounts have just beat it like a stick. The trend following index has crushed. This is an index of every single trend following firm that's been in operation for 10 years or more. You can see the gray line is the stock market, And it's done really, really well. No argument, stock market's done really well, really well. It just hasn't done as well as trend following. Trend following will always win. Now, the first human city was in ancient Sumeria, modern day Iraq. They used, fun fact, barley as money. Barley was the first money, and they stored the prices of this money on these things, cuneiform clay tablets. They buried them, some motherfucker dug them up, found the prices for barley. You can run our trend following systems on it, and it works just as well. Actually, almost exactly the same Sharpe ratio on these 5,000-year-old barley prices as it does on crypto prices today. The very first derivatives markets weren't in the West. They were in Japan. Japanese had the first futures market. They had rice trading futures markets. And the candlestick patterns that I showed you, this dip buying setup, the lowest low in 10 bars, one or more higher closes, one or more lower closes, I didn't invent that. It's from a 16th century Japanese motherfucker, and I just stole it off him. And as we can see, 400 years later, we're making money off that setup today. Trend following works just as well as it did back then. Now, billionaire Cliff Asness has done an analysis of how well trend following worked over the last 100 years by decade. From 1880 all the way through, you can see every single decade has been profitable, and it's beaten the stock market all the way along for over 100 years. What I'm trying to say is that this is as close to a law of gravity as we have. It just works. It works in stocks, it works in bonds, it works in real estate, it works in FX, it works in commodities in every country in the world, and it's worked going back for as long as money has existed. In fact, before money has existed, when we were using sacks of barley as fucking money, this shit worked just as well as it does today. It's worked for 10,000 years. Why? Because based on human greed, people like things that go up and they get greedy when shit goes up. We can all feel that in crypto now. I'm getting greedy, hella greedy. And we all get scared when things go down. We freak out and get scared. Human nature hasn't changed. Human psychology hasn't changed. We are still greedy. We are still fearful. But the amazing thing, the opportunity of our lifetimes, and I'm not kidding about that, is that it works 6 times as well in crypto as it does on the old style markets. And you can see this, the blue line is our system. The yellow line is Bitcoin. Bitcoin makes a lot of money, but it has very wild swings along the way. This was an 83, 84% drawdown. Makes a lot of money. You lose half of it. It looks like you're going to be okay. It breaks your heart. It looks like things are going to be okay again. And then things are far from okay. And then you hope that it stopped here, but it doesn't stop. It keeps fucking you right in the ass. And then it looks like it's going to be okay, and it's definitely not okay. And right when you think things can't get any worse at all, Sam Fuckman Fried steals everyone's money, and the thing shits the bed for like the 6th time in a row. It shits the bed. And then it starts to go up again, right when everyone hates it, and you're not interested anymore because you lost all your money. Now, in comparison, our system, it just goes sideways. Doesn't make money all the time, but you don't have these big swings. You don't lose it. You've got access to liquidity all the time. So if this is you here and you want to pull some money out, you have to wait until it gets back up to here before you can pull your money out. If you bought here, you still can't pull your money out, even though you're almost back to square. Like, you still got to wait to make it. But with us, with using this system, you're only like 5 mouse clicks away from getting your money back. You've got constant liquidity. If you want to buy a house, if you want to buy a car, and if you bought at the absolute freaking top, if you were the dumbest guy in the room, you still doubled your money and then some, while everyone else was busy in the getting fucked business. This is what we call the greatest discovery in little guy finance. Now, instead of talking about it, let me show you. So the 2021 came in 2. This was the second stage. Let's look at them both. So in the first stage, this is the start of January 2021. This is the end of the first stage. We have a couple of these standout coins, like Matic just did like bullshit better than everything else, right? We see a clue. Way before Matic went to the moon, you can see that it started outperforming its peers very early. Doge, way before Elon tweeted about it, you can see back here, Doge started to outperform its peers. This is a clue. This is a clue that we have to pay close attention to it. And by the way, Doge is doing this again, right? Now, the second part of the bull market in 2021, who were the winners? The coins that you want to hold. Like, everything made money, but really, if you held Sol, Mana, Near, and AVAX, which we did, you just did, like, 20 times better than everyone else. AVAX, the winning coin by a fair margin, you can see way back here, it's the black line. See how right early on, it's starting to get a lead on all its peers, and it's just racing away with the game. The second one, Near, you can see the brown line right from the start. Sol, purple line. It's pretty obvious, right? And Mana, right here, it's just like, when you see that happen, you have to go, well, fuck, I don't understand this, but I have to get on board. It's a rocket ship. You don't ask which seat you're getting on. You just get on board. Coins that start performing nearly always continue to outperform. And this is the key to the whole thing. Now, you now possess the ability to know with absolute certainty which coins are going to be the moonshots in this 2024 bull market. It's going to be the ones that we identify in the 100x coin club. Now, let me show you how to take all the thinking and all the guesswork and all the skill, all the stuff that's like the stuff that I'm showing you is pretty high skill stuff. Let me show you how to take all that skill out of it and turn it into a system that doubles your money every year on autopilot. And just so that you don't think it's all hype, everyone who's here today gets this system, not the automated version. You get a signal service version of it for free, just for turning up today with no catch. But if you want me to automate everything for you, so you can just sit back and collect the bag with no work and no risk, I'm going to offer you the best deal you can imagine on that. We can automate the whole thing for you into a press button money printing machine, and you will learn how to ride this bull market for all it's worth, and then compound your gains into generational wealth without lifting a finger. So let's say you bought Bitcoin in 2019. You had a time machine, you bought it for $3,742. You would have made 57% per year, while we made 107% per year over that same time. But more importantly, you made it without experiencing one single bit of the torment, pain, and butthurt that the hodlers had to go through. Full credit to them. But unlike the hodlers, at any point you could cash your money out, and you never got stuck holding the bag. You never had to wait for the market to come back to get your money back. In fact, if you bought at the top of the last bull, you still would have doubled your money, and you never had to try and time the exit perfectly, because that's fucking hard. As good as I believe I am, I missed the exit last time. And that's just the truth. And I was paying really close attention. You never experienced a losing year. You never got stuck holding the bag when the bear markets hit, and they always hit. If you put $10,000 in this in 2019, you'd have $380,000 right now. That's not that far. That's not that far in the past, compared with 110,000 if you put it in Bitcoin, 146 in altcoins if you pick the right altcoins, but $380,060 in FINREV. You'd be here, but the important thing is that the compounding will have kicked in, and you're within sight of a $14 million retirement fortune. 5 to 10 years, but between year 5 and year 10, that's just a couple of hills over around a few more bands. Like, you can plan for that. You can start to get ready for a serious rich guy retirement. Now, if you wish you had a time machine, Marty, we got to go back. We got to go back to 2011. We got to go back and buy those fucking Bitcoins. This is the next best thing. I traded this way personally in the old market since 2014. I stopped doing it in TradFi in 2020. Put the TradFi money that I had in a fund, which has done pretty well. My retirement accounts are compounded up. I've been running this way on crypto for a couple of years now. The results are literally incredible. A year ago, we offered it to our best clients in the middle of the bear market while everyone hated crypto and while everyone was taking it right in the ass. And the real results have been, after costs and fees, the no bullshit, actual money in the bank account, 100% per year during the bear market. And the bull market, which started in October, you can see the exact moment the bull market started, and we're just on. Like, since mid-October, client accounts are up 70%. We can make that more or less depending on what we call the volatility target. We can make this wilder with bigger upside and bigger drawdowns, or we can make it smoother if that's your thing too. Now, I want you to see, these are the 2023 full year results for the biggest hedge funds in the world. You can see there's a couple that did pretty well. 59, 48, 44, and then we get down to 31, 22. Like, and down the bottom, we've got 2.73. Like, hang your fucking head in shame, boys. Like, we are doubling the very best hedge funds in the world. Year after year after year after year. This isn't like a one and done, like a lucky streak situation. This is during bear markets and bull markets. We are beating the best hedge funds in the world like redheaded stepchildren. We promised to double people's money in a year, and we did, and we're going to more than double people's money this year. I reckon we're on track for 200%. Every single person who's used this system for any length of time, more than a couple of months, has made money. Everybody wins. Everybody wins, no exceptions. And I've never heard of anything in my life like that before. Now, let me show you. Just bear with me while I get nerdy for just a couple of minutes. So what do? We are trading a very large universe of coins, all these coins. Why? Because there's a lot of luck in trading and there's a lot of randomness and noise. If you want to take the luck out of it, you just take more bets. And that's what we do. We take many bets. We generate a forecast. That forecast is an average of 6 different trend following systems, which we combine into one number to rule them all. 10 is a normal size long position. 20 is a maximum. -10 is a normal size short. -20 is a maximum short. If the forecast is bigger, we have a bigger position. If the forecast is smaller, we have a smaller position. So you can see here, our forecast goes positive right when the bull market kicks off in 16th of October. And we're holding some position all the way. We start banking some when it looks like it might reverse, and then we just smoothly ramp it back up. And now we're not completely balls long, but we're pretty balls long. And that's the way it is. Now, it's no big trick to make money when the market's like it is. That is only superficially impressive. What is impressive is making money when the market shits the bed. So I think that the worst possible time for crypto, like the absolute, like, oh, this really sucks, was when Sam Bankman-Fried went to jail. And this is our forecast. And the day, this is Solana, which is Sam's coin. Fuck that guy. Hope he gets 1 million years in jail. We get long the day before all the bad shit happens. And our forecast was 4.5. So we had about a half a position long. Now the next day, the rumors started to swirl, there's trouble in paradise. And people were saying, oh, it's just FUD, it's Sam, he's super rich, whatever, it's not going to happen. But if you imagine how good you'd have to be to say, yesterday I bought Sam's coin because I like Sam and I like his exchange and I like everything. The next day to say, hang on, those rumors are weird, I've got to get out. Like maybe you would be exceptionally good and could do that. But most people are just going to give it one more day and say, oh, well, that's not so good. I'll give it one more day. And then you're stuck. Like then you really are stuck. And you bought it at 33. Now it's closing at 23. You've lost half your money in 3 days. Now you've got some shitty decisions to make, and then you're stuck and it gets worse. Nearly everyone does this, right? Nearly everyone does this. But look at what we did. We got out of the trade on the first day. We got cut, we got out. And then we said, well, we're going to go short. We're going to increase our short position size. We're going to increase our short position size. And how did we do? So these are all our forecasts here. We got short here, and you can see that we just rode this sucker all the way to the beach, all the way down to like $9 before we started closing out our profit. And we started closing out our profit here. And then what's amazing is that right here, like I want you to imagine you'd have to be a Zen monk crossed with Warren Buffett to say, I've just made the most money in my life shorting Sam Bankman-Fried's coin. I've shorted it into a shallow grave. I've finally banked all the profit. I'm up big. And then the very next day, you're going to say, well, fuck it, I should go long. Like, no one's that good. Like, literally nobody in the world is that good. But an algo is, because it's like, it's the honey badger thing, right? Like, and you can see it gets long Solana here. What was the price? 23 bucks. We've held some position. We bank some and then we add more and we're adding more now. And we've held that position from like 20 bucks all the way up to 120 bucks today, and we're still holding the position. So this is what systematic trading, and in particular trend systematic trading, can do for you. It doesn't give a shit if you like the coin, if you hate the coin. It doesn't give a shit if you like the guy or hate the guy. It doesn't care if you're greedy or if you're fearful. It just doesn't give a shit. And it, best of all, it does it 24 hours a day, 7 days a week. It never makes a mistake, and it does it on 100 coins simultaneously. It does it as good as me on my best day, and I'm really good. I'm one of the best that you'll ever see at this, and it's better than me, and it does it on 100 coins at a time. Now, let me show you the actual thing. One sec, let me just load it up. Sorry, I should have loaded this in advance. All right. So the first thing that you see in the middle, this is how much money you've put in, less how much money you've taken out. This is how much money you've got now. This is how much profit you've had. You can see the last couple of days have been like 94, 98, 97, 99, 99, 103, 105, 107, 115. It's doing pretty well. The next thing that you see, the top 10 long positions and the top 10 short positions. We only have one short position at the moment, which is TRB. I'm really happy to be short this coin, by the way. There's big problems with this coin. There was an exchange that rugged its users, and they own 16% of the supply. This one's going a long way down. You can see that our positions right now, our biggest positions, Bitcoin, NEO, BNB, Ethereum, TRX, these aren't coins that I would naturally hold. They're not the coins that I would like, but the algo does it better than me. So let's click on our portfolio tab. You can sort this alphabetically. You can sort it by position size. You can look at all the longs, or you can look at all the shorts. You can see we only have one short today. But my favorite way to look at it is by notional value, because trading is an 80-20 business, like most businesses. If you just look at the top, 5 or 6 positions, that'll tell you most of what you need to know. So let's look at, you can click on any position and you'll get a chart. This is our forecast. And we've been long this all the way that you can see on this chart, and we're just maxed out long, and there's good reasons for that. This thing just keeps going up. It's been a tremendously profitable trade for us. Let's look at Ethereum. It's our second biggest position now. We got long here, backed off the position, almost got completely out of it, and now we've ramped it up, and now we're balls long. Now, the next thing that you can do is click on a trade history, and you can see what we did every single day. So most days we're not going all the way in and all the way out of coins. We're just adding a little bit, like a couple of $100 worth of Bitcoin we sold, a couple of $100 worth of Link we added, a couple of $100 worth of Neo we added. It's just playing around the edges of the position. And you can go back as far as you want and see what we did Wednesday, what we did Thursday, and you get full control. You can also see this in your exchange account. You don't have to use this at all. you can just log into your exchange account. See it. Next thing that I can show you. Okay, let me show you how it is to set up. It's pretty easy. So you click on up here, you go to settings, go to API credentials, choose your exchange, Binance, BitGet, Bybit, DYDX, or KuCoin. The best exchanges for US customers are DYDX and BitGet. I strongly recommend DYDX. It's been performing very well. And the advantage of it is it's very hard for the US government to ban it. So you don't have this situation where they can change the rules. We insist that everyone use two-factor authentication. Which is like you either use the Google Authenticator app or use a physical authenticator key so that no one can get access to your account without it. Now, the thing that I want to point out to you about API access is that there's no, it only gives us permission to trade the coins. It doesn't give any permission about withdrawing or transferring money out of your account. It's actually physically impossible, or me could run off with anyone's money. That's literally impossible for it to happen. I think that's all. I think that's all that there is. This is about creating generational wealth from crypto. So it's really about compounding. This is going to happen over 5 to 10 years. So if you do 100% a year and you put in $10,000, after 5 years, you'll have 320. After 10 years, you'll have 10 million bucks. Like, that sounds ludicrous, but compound interest is real. And I'm a beneficiary of compound interest. Like, I look at my accounts now and I'm well on the track to $10 million net worth from this, like a little bit below that. And it's astonishing to me that, like, 4 years in a row, even during the bear market, I've made $1 million from trading. Like, it's amazing to me how compounding works. Now, our strategy has done on average 107% per year. Anyone who wants to bet that we'll beat that, we're going to beat that we're going to beat that so hard this year. And what you really want to do here is just relax and enjoy the ride, and know that if you can keep your hands off the steering wheel, if you can just not fuck with it, it's going to make you rich in 5 to 10 years, no matter how small a grub stake you start with. If you can just not mess with it, if you can not worry about the day-to-day fluctuations, then you can be highly confident that at the end of the year, you're going to show a profit. Now, there's one difference between bear markets and bull markets, and this is intuitive. The nature of bear markets is they take the stairs up and the elevator down. So in other words, we get crashes in bear markets. So bear markets, we get long sideways periods. And then when it crashes, we get explosive upside. So, but in bull markets, we get this kind of steady as you go with short sideways periods. The average is 19 to 31 days. We had a 31-day period here. I told you all to invest, and now it's gone up like ludicrous since then. My goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want, free from worry or fear. And most people are using their time to buy money, going out and wage slaving. I want you to do the other. I want you to do the other way, flip the script on that. Use your money to buy time. Use your money to buy freedom. Let compounding do the real work. Get the life that you deserve. Who's impressed so far? Should be. But first, I owe you a big thank you. For those of you who've been with me from the start, I know there's people here who've been on right from the start. This is a crazy journey that I'm on. Words alone aren't enough to thank you for the support. Like, you all trusted me when I made this crazy promise that I was going to double your money this year, and now we're fucking doing it. Like it's the honor of my life to absolutely grind like an animal every single day for this community. I'm leading us all to generational wealth. We're well on the way. And for those of you meeting me for the first time, the only way that I can earn your trust in an ocean of bullshitters is just to put money in your pocket right away. So for giving me your time and attention, I'm going to give you all 6 months access to the light version of the system that you've just seen. So we have 3 versions. We have FinRev Silver, Gold, and Platinum, which I'll get to. Silver version is all yours. It's far simpler. It's easy enough for a beginner to use. It gets around 75% of the performance of the fully automated system, but it stops you getting wrecked in a bear market, which is, let me show you how to use it. It's the exact same website, login, security as you've already seen. You get a simplified dashboard, and it just tells you today's trades. I've got to open a long on Bitcoin, open a long on Matic, and you've got to close a thing on this. It tells you your current open positions, and it tells you the recently closed position. So it's the same thing, except you have to enter the trades yourself. Does it matter when you enter them? Not really. I would say try and do it at the same time every day. That's my only advice about that. Now I've got one more thing to show you, and truly I've saved the best for last. So what if you could earn twice as much as the system I've just shown you? And what would that do for your life? How much faster could that get you to the freedom number? If you're starting here with $10,000, the blue is 100% a year, the red is 200% a year. Year one, 20 and 30. Big difference. But by year two, difference is $40,000 to $90,000. That's a $50,000 difference. By year three, red's running away with it. You're 270,000 per day. And both are good. Both are amazing. But really, so I want to show you how the really big algo trading firms like Rentech, like Jane Street and Susquehanna Group, they make so much money. And how the new modern pod shop hedge fund model, if you guys know what that is, how it really works, is what they're doing is blending multiple systems together. And there's a mathematical property of trading systems where the whole is more than the sum of the parts. Just like holding 5 stocks is better than holding 1 stock on average. Trading multiple systems is better on average than any single system, even the best system in the world, which is trend following. So when one system isn't working, another one will. Now, the second best edge in finance, some people think it's the best, I think it's the second best, is carry. Carry is the amount that you earn if price stays the same. It is one of the strongest edges in finance. There's far more institutional money using it. Even the trend, there's like $3 trillion in it. It's not quite as good as trend, in my opinion, but it's still great. It's got a Sharpe ratio of 1.17 compared to trend at 1.7 to 1.8. It's got a CAGR of 53%. But the way that it makes money is a little bit more interesting. It makes money much more consistently than trend and then shits the bed quite fast. Makes more money quite consistently and then shits the bed quite fast. Makes money consistently and shits the bed quite fast. Very interesting property. Now, look at the magic that happens when we combine these. Now, I advocate, and how did I come up with this? I just ripped it off. The biggest hedge fund in the space is called Man AHL, and they do a 65-35 trend carry mix, and I figured that was a pretty good place to start because who am I to say better than that? So we're taking carry, which is a 53% per year, Sharpe 1.17, and we're mixing it with trend, which is 100% per year, Sharpe 1.71. We're mixing it in a 65-35 mix. And look what we get. We go from 100.9% to 243% per year. Now, fair warning, the Sharpe ratio goes up to 2.15. I would prefer everyone to dial this down from projected 243% a year. I would prefer to see you at about somewhere between 150 and 200% per year. I think that the max drawdown here of 34% might test the patience of some of you. I would prefer to see you with drawdowns constrained to 20%, and still 200% a year is a lot of money. But it's up to you. We build a custom system for everyone with the ratios and percentages that you guys want. I'm not your daddy. So our system is custom for every user, and we can dial this up. If you're a bit of a degen, we could even dial it up a bit from here. And let me show you just briefly what happens when you dial it up. One sec. We have a we have a user. He's not a user, he's my business partner, but he is the smartest guy that I know, but he's a fucking idiot. And he put in $225 in one of his accounts. He's got like 6 accounts. And he put it in at 100% volatility target, which is much higher than I thought. He has turned that $200 into $14,178. So he is using what I would consider an irresponsibly large volatility target, which guarantees at some point 90% drawdowns. His idea is that, well, fuck it, I'm just taking a risk. This is an unacceptably high risk, but you can see that you can dial this up or down to wherever you want. So this is the difference between retiring at 40 and retiring at 50. And the difference between, retiring when you're old and your body's breaking down and your dick doesn't work and you don't want to travel anymore, and retiring while you're still young enough to get out there and enjoy it in the world. Big difference, guys. So here's the deal. We've got 3 tiers of FinRev available for you today. We've got FinRev Silver. Everyone who's here gets 6 months of that for free. It works really well. It honestly works really, really well. FinRev Gold is the trend following system. Does 100% a year. It's what all the results I've shown you today. The results are amazing. Right now, trend is the dominant edge. It's for the next 3 months, I don't think anything will beat it. FinRev Platinum and FinRev Gold is 6,500 for 3 years of fully automated trend following trading. What happens at the end of that 3 years? We don't sting you for another 6,500. If you want to continue trading, we share the profits. We want 20% of the profits that we make together to continue for as long as that goes on.
Hey, Scott, turn the screen share back on, dude.
Oh, sorry, brother. Thank you, man. So 3 tiers of FinRev. FinRev Silver is everyone gets free 6 months. FinRev Gold is the trend following system that we've shown you today. You get 6,500 for 3 years of it. That's like $2,150 a year. It's like $130 a month. And why are we doing it for 3 years? Because it's not the kind of thing that you want to switch on for this month and off that month, because you really need to give it multiple years. Honestly, you really do. FinRev Platinum is the trend plus the carry system that I showed you, and all of our systems, including future upgrades. And you get the ability to run multiple exchange accounts. So let's say you wanted to run a small account with a totally irresponsible, degenerate leverage, like I just showed you, and you wanted to run a main account fairly sensibly. Let's say you wanted to split your risk between KuCoin, Bitcoin, Bybit, and BitGet. That would be FinRev Platinum allows you to do that. The same deal after the 3 years are up. We don't sting you again. We just charge you 20% of the profits we make together. This is set up so that if we don't make you money, we don't deserve to make money. FinRev Gold, you get for 6,500 for 3 years. You get 3 years of automated algorithmic trading. You get a VIP onboarding with one of our expert crypto trader coaches. We're not talking about like a customer service guy from the Philippines or whatever. We're talking about someone who makes their living from the crypto market, who understands the ins and outs. You get all the same stats and monitoring and dashboards that I showed you today. You can delay starting or pause at any time. Let's say that you think that we're in alt season and the opportunity is too great. You've got this meme coin that you think is going to 100x, and FinRev won't 100x. So if you think you've got that opportunity, you can just pause, pull your money out, stick it back in. You can delay starting. If you can get the deal and start it at the end of the bull, you start it whenever you want. You can pause, start, in, out, however you want. We've got a double your money guarantee. If you aren't in profit after your first 12 months using the system, we'll let you use it for free until you've doubled your money. So let's say, worst comes to worst, you buy it, you haven't doubled your money in the first year. Until you've doubled your money, the 3 years only start after you've doubled your money. If you want this, and you should get it, everyone in our company uses it. My family uses it. It's the first thing that it's the first system I've ever built that I told my dad to use. FinRev.trade for call. Now, the Platinum is a very, very exciting system. It's the same deal, 3 years of automated algorithmic trading. but you get it completely custom designed for your goals. We make it as mild or as wild as you like. It's much smoother than FinRev Gold. You get grandfathered into new systems. We have 6 more systems on the drawing board. And let me show you the latest cool research that just dropped. So I should have had this. Should I have this ready? Let me show you the kind of thing that we're constantly coming up with here. So this is from James, our head of research. He dropped this on me yesterday. So he's been testing how well holding each coin in proportion to how well it did over that hour of the day. So the first hour of the day, the second hour of the day, the third hour of the day, over the last 30 days. On the top 50 coins, you can see that this is like truly incredible. This is before transaction costs, so we're going to have to use some trickery here. But this is the kind of stuff that, you know, I don't design these systems anymore. I'm just not good enough to do it. Like, the systems are all designed by people way smarter than me. You should all follow our head of research, by the way. His name is The Robot James on Twitter, and he has an amazing website called robotjames.com. And he's the smartest guy I've ever met. Like, and certainly the best trader I've ever met. And he's a legend in the quant world. So you get grandfathered into all these new systems. You can delay starting or pausing at any time. So you get both trend following and cross-sectional carry. And what this gives you is smoother and faster returns, and you get the same W money guarantee. FinRev.trade/call. Yeah. Just if you need a payment plan, if you want a shorter commitment, if you want a longer commitment, we've got plenty of options. We're pretty flexible. Just book in with the onboarding team, discuss your situation. If you're an existing customer and you want the cross-sectional carry, everyone is grandfathered into 1st of February, right, Ian? I think so.
Sorry, dude, yeah, that is correct.
Yep. Okay. If you want to if you got in after 1st of February and you want to upgrade, you can just pay the 3K difference and upgrade it. Ian, any questions for me, bro?
Yeah.
Very handsome tonight and downright respectable. I was expecting to have to wait until I was back in Thailand before people started telling me how handsome I am. I have a fun fact. I have a security guard at my house who's this little old Thai auntie, and she's a little fat thing. And every day I drive out with my wife, and she says to my wife in Thai, "Oh, Kungov, Kunsa Carlo Mark." It was just like, your husband is so handsome. You're so lucky to have a handsome husband like that. It's like, yeah, bitch, yeah, I am.
Nice. Okay. We'll just start with a quick bit of admin. So if you're on the call today, then we've got your email, and then we will send out an email at the end of this call that'll have the access details to the FinRev Silver. So nothing to do, just kick back and relax there. So the FinRev Silver is a manual trading system. And so, sorry, Scott, somebody was asking why there's such few trades on FinRev Lite versus automated FinRev. And the basic answer is that FinRev silver, gold or platinum, is taking hundreds of trades, opening and closing. So FinRev Lite boils it down to a maximum of 20 trades, and then it's totally tradable by a human being.
I'm going to post, because I don't believe in hiding stuff, I'm going to post the actual details of the research in our entry and the algorithm rules. I just posted in the chat, just because I don't really believe in hiding that stuff.
All right, Scott, here's a really good question then. So obviously we're all excited about the market going up and everything. Kim says, can you explain the drawdowns?
Sure. In fact, I'd love to explain the drawdowns.
This is a really good question.
You can see the draw. You can see the underwater plot.
We can.
All right. So this is our underwater plot. This is our average drawdown. And you can see that mostly the drawdowns are pretty constrained. The biggest drawdowns that you get are in transitions between bear and bull markets. Now, the reasons for that I'll probably nerd out on, so I won't nerd out on. But generally, they stop at about 20%. The biggest drawdowns are all going to be, the biggest drawdown you're going to have is going to be when the bull market ends. Why? Because we're going to be long a bunch of stuff, and we're going to get out of it as the market moves against us. But right now in the bull market, we're looking at 10, 8 to 10% drawdowns.
Nice.
And an average of 8.3% over the last 5 years or so. So the upshot of it is that FinRev is much smoother and the drawdowns are much smaller and it's much easier to live with and it's much more certain. You can't make as much money in any sensible system as you can just YOLOing degenerate shit. Like we bought this coin Retardio yesterday. Like if it works, which it may not work, it'll probably do 100x. Like FinRev isn't going to do 100x, but it's completely irresponsible to put more than $1,000 or $2,000 in a coin that's called Retardio that has no actual use, right?
Exactly.
Support at finrev.trade. Elmer FSU, you're treating the algo like a person. It doesn't take time to get its feet. It doesn't have to, it's not a person. The algo works. It just works. So right now I would add it. The best time to add capital is during a drawdown. The second best time is early in an alt season, and we're quite early in an alt season. It started 3 days ago. So I would rush to get capital in. In 3 months' time, I would probably wait for a drawdown before adding capital, but right now I would rush to get it in.
Great question from Mike, who's one of our OG CSI members. Just curious if there's any tidbits about when the carry is going to go live. Just systematically, we will obviously make announcements for it, but
we're just testing it on our personal. We're testing it on our personal accounts right now. Because it's a more complicated system. I'm just not comfortable rolling it to customers until I've seen how it's behaving with my own money. What volatility setting in FinRev results in approximately 20% drawdowns, 45% on trend, and a bit less than that on carry. And for someone who was asking, where do I get these degenerate coins? I think the best place to buy them for ERC20 tokens, which is tokens on the Ethereum chain, is CowSwap. And I use Raydium, RAYDIUM.io for Solana. What wallet do I use? I use MetaMask. And for Solana, I think it's called Phantom. What's it called?
Yeah, Phantom, you can get hooked up to Radium with that. It's pretty handy.
XGL Xavier, any exchanges for New York's? I would be using the distributed exchanges like DYDX, like Hyperliquid.xyz. I would be using for the swap exchanges, CowSwap. Angel, so happy, up 10% in 3 days. Very happy. I really enjoy Hyperliquid as an exchange. You guys in New York can definitely use this exchange. It seems to me to be really fucking good. Like, I like it. I dig it.
Yeah, I use Hyperliquid. It is very good. I use Hyperliquid, Binance, Kraken. I moved away from Gate.io. I just didn't like that. I always found that site a bit greasy, but
shit, you just reminded me I've got a Gate.io.
Yeah, I use BitGet. I like that one.
Fuck, you just reminded me I've got a Gate.io account filled up with Woo that I haven't checked in a year.
Yeah. Oh, fuck, you just reminded me I've got I've got a 10x.
Oh,
Femex,
yeah.
yeah, I use Femex as well. That's a cool account.
Okay, this is a good question, Scott. In terms of an allocation to FinRev as a percentage of overall portfolio with bonds, equities, and real estate. Okay, this depends on a couple of things. General principles. If you're closer to retirement, you have to have more bonds and less equities. So as you get closer to retirement, there are no do-overs if you have a stumble. So if you're a long way from retirement, you can be risky. Okay. It also depends what is your income, like where do you earn your money, like from your job. Having a job that's stable, as opposed to say an internet-based business or a side hustle or a business that's very economy dependent, like for example, like a housing contractor, like a builder, would be very dependent on the overall economy. If you have an income which is going to go down when the economy shits the bed, you have to be a bit more conservative. If you have a job that's going to be stable, even if we get a recession, then you can be a bit more aggressive. If you're young, you can be very aggressive. If you're older, you have to be less aggressive.
Nice.
Where am I? I worked it out totally, including the real estate that I couldn't even work it out off the top of my head. I'm somewhere between 22 and 28%, I think. And that's probably a little high, to be honest, but I really understand the system. So I would say, and also it depends on how much we're talking about. If we're talking about, are we talking about a total net worth of 100 grand and you're 40 years old staring down the barrel of a pretty lean, meager retirement? Well, more crypto would be appropriate then. If you've got a $5 million net worth and you're on cruise control to get the things that you want in retirement, it's irresponsible to go more than 15%. So here's the way that I think about it: is the biggest mistake you can make in life, and I know this because I made this mistake myself once, is once you have won the game, you need to drop the mic and start taking less and less risk. So one of the worst mistakes you can make in life is risking the things that you already have and that you need for things that you don't have and don't need. And I did that once. Humiliating story. When I was 25 years old, I was worth 10 million bucks. And this was 25 years ago when 10 million bucks was a lot of money. By the time I was 30, I was worth a negative amount of money. By the time I was 31, I was walking out the gates of a maximum security prison with every single thing that I owned in a shoebox. You can't possibly imagine how humiliating it was to make the mistake of having everything I needed. 10 million bucks back 25 years ago is the equivalent of about 50 million bucks today. I was much richer than I'll ever be in current money, and I lost it all. Why? Because I took more risk. I risked the things that I already had that I needed, things that I didn't have and I didn't need. And that was the worst mistake I'd ever make, and the worst mistake anyone can ever make. So don't be me.
All right, awesome. So just as an FYI, that's 90 minutes of people's time that we've taken up now. We've got a couple of.
Yeah, we're taking up too much time, guys.
Yeah.
Anything else? Ask in the group. Anything else? Ask in the group.
Awesome. Thanks, everybody.
See you guys.